Nischal Maheshwari is joining us now. He is the Chief Executive Officer, Institutional Equities and Advisory at Centrum. Nischal, hi, good morning. Thanks a lot for joining us. I wanted to start with some big stocks. Let's talk about the IT services space first, because that is where concerns are emanating once again on whether the stocks need to correct more because of the margin concern and what's happening in the US, and the fact that the valuations, while they have corrected, might still be higher. But your thoughts on large cap IT, how to approach it now?
Morning, Anuj. I think this is a good time to start accumulating the IT stocks. I happened to spend a couple of weeks basically in the US, and I didn't see any sign of issue as far as demand is concerned. Whether you were at the hotel, restaurant, or the airport, basically, I think there was huge crowds. Yes, people are not coming back to the offices, but that doesn't drive your demand for the IT. And so what I see here is basically last quarter at around 26-27% of attrition. I think the attrition is peaked out. I believe the margins have also peaked out, bottomed out, and the stocks obviously continues to remain cheap. So I think this is a good time to accumulate IT stocks, and especially the large caps.
Okay. Nischal, good morning. What did you make of the Reliance AGM yesterday? They've crystallized a plan as far as the Jio 5G rollout is concerned. The succession plan is in place. So sort of ticking all the right boxes. What would your view be on the stock now?
Morning, Sonia. Nothing incremental came out of it. I think this was all known except for the existing cash cow, which is the oil upstream and downstream business. Basically, at least from the presentation, it is not clear who is going to be driving it. So that's the only gap which I see. But otherwise, I think it was ticking all the boxes. We continue to remain positive on Reliance and continue to believe basically that's a good price to accumulate.
Nischal, by the way, any thoughts on this Piramal, the demerger? It's been long awaited now. It's finally happening. So you'll be able to basically buy the financial services entity standalone. And of course, the pharma business gets listed later in October. That's the expectation at least. Do you see any great interest here?
Morning, Prashant. I do not have it under coverage, but historically, we have always seen basically splits always creates value. And that's the only guiding principle I would take, basically. And I think historically, Piramals have done great in pharma. So I don't see any reason that you would be losing any money here. So I think definitely if somebody's already have it, I think you should hold on to it and wait for the demerger and relisting of the pharma business.
Okay. Nischal, in the auto and auto ancillary space, so what would be your top bets now after the rally that we've seen?
So we continue to be positive on the CV space. I think Ashok Leyland and Tata Motors, those are our two top picks basically out there. I would actually put Tata Motors ahead of Ashok Leyland now, given that they have been able to be very strong on the green, on the EV vehicles, and almost, I think, if my numbers are not wrong, I think 70% of the market share, though it's a very small market today, but they already have that kind of a market share. And I think they have taken a lead ahead of everybody. So those two, and then behind that, basically Mahindra and Mahindra, and then then Maruti, and then the two-wheelers. So two-wheeler is now becoming a last preference for the moment.
Okay, and two-wheelers have not recovered as much as the other pockets, right? There's still a big gap in the mass market segment, which has been struggling for a while. Do you like such names? I mean, he did mention that acquisitions will lead to rising costs initially. How do you approach the stock?
So I think this sector is in for consolidation, and I see basically that's the way to go forward. So if you really look at it, basically across the country, there are only 3-4 chains of hospitals at the moment. And for a country of this size and so many people, I think you can actually have 10 more of these, of the likes of the big chains like Fortis and all. So no issues at all. I'm saying basically somebody who is invested into this, he has to invest in for a long term. This is the way basically it is going to happen basically, because these are all heavy capex industries, and one has to be, but high margins also. You say he's got 20, 28, 30% kind of EBITDA. So we do not cover it, but I think this is one of the good hospital chains basically. And I think consolidation is the way to go forward in the industry.
Okay, consolidation is the way to go forward in the industry is the view over there. Let's talk about some more names. Nishcal, any thoughts on Zomato now? On because the jury is out on whether the worst is over purely in terms of stock price action at that 41.42, or could there be more downside? Your views?
So I would wait for, I think the management in the last call has already guided that they are now in the 3 or 4 quarters aiming towards profitability on a per unit basis. I think it's now time basically to wait and see how historically the management has delivered very, very smartly. So let's wait and see for the next couple of quarters what the management has guided. Are they headed towards that? I think in a quarter or two you will come to know if the losses are going down and unit economics is improving. If that is so, basically, then 41 was the bottom of the stock.
I think we spoke last time also when you were on the show, defense, right? Look at something like Mazgaon Dock. We had them on the channel, I think, earlier part of last week, and they laid out pretty sort of not aggressive plans. I mean, is it that there's a lot of work coming in from the government on various fronts, not just kind of building ships, but submarines, etc. as well. Stock's just gone absolutely berserk. Any thoughts here? The stock or the space?
So, Prashant, I've looked at the defense space. The issue happens basically that the capex part of defense is very little basically of the overall. So we will see every year a large budget for the defense, but a majority of that, 70% that goes into the salaries and everything else. And then there is maintenance, and then there is upkeep of the existing hardware. So not more than 10% of historically is what my numbers I remember is the new capex that gets allocated every year. And then it gets spread over so many projects which are going over. So yes, you have a very large order book basically, but then whatever the government is going to allocate for that current year that's what you can achieve. So that is the question basically. We go back and look at historically Cochin Shipyard, Mazgaon Shipyard, they all got 10 years of order book and all that. BEL, HAL, everybody has 10 years of order book, but then money is not coming through. So it is not that suddenly that you have a large order book, you will be able to execute more. It totally depends what kind of allocation the government gives you basically for that year. So that is the question basically, and that is the, I believe, is the upside cap for these stocks.
Okay. Some of these laggards have come back this month, right? I mean, look at Zomato, for example. The stock is up over 26% in the month of August and is now back above that 60 rupee mark. Do you like names like this? Would you bottom fish here or would you stay away?
So I said basically just now that Zomato, I believe basically we have to wait a couple of quarters. He has guided. Similarly, I think Paytm is now guiding, saying that I think most of these people are now moving on understanding basically how the listed market plays, because now they have all become listed stocks. So I think the management has to go back to their drawing boards and recalibrate and see basically how fast they can come back to profitability. Because the listed space only understands profits and it is not a space basically where you take calls for 5 and 10 years, which maybe in the private equity space does. So I think once you are listed, you have to recalibrate yourself, and the faster these guys recalibrate, the better would be basically, and that's the way I think the market is going to like. So I think a couple of them have already started talking about profits. So one has to see how fast they can turn around and show unit profitability, and that's the way to go forward.